Hello traders, it's Samurai Trader here. Welcome to session 127, how to day trade any market. In today's session you're going to see how I trade the RTY. In fact, I had two trades for two wins, so I'm going to play back a short recording where I recorded the trades as they set up, and as I executed them you'll get to see how I manage those. Now, what I teach in these sessions you can apply to any market. You've probably seen some of my videos on the ESCL, on gold, the NQ. It doesn't really matter. So I've got a lot to cover in this session, so let's get into it. And let's not forget, I actually call this the $1,000 a day challenge, and if $1,000 a day isn't enough for you, you just increase the amount of contracts that you're trading. But I do also need to bring up the risk disclaimer, because there is a risk in trading. Don't trade with money that you can't afford to lose. The great thing about trading today and most trading platforms, you can trade on the simulator until you are consistently profitable. Just a very quick advertisement: if you haven't already downloaded my training manual, you can go to the description link below. Now, I will be referring to an Excel spreadsheet in a couple of moments, because this is about gaining clarity, and where I'll also explain what my goals and targets are when it comes to trading. So you'll be able to go to the description link below and download my Excel spreadsheet along with a training video I've recorded on how exactly I use it. Better still, make sure that you subscribe to my channel so you can be kept up to date with all of my latest videos, and even better still, become a member. And very quick, I'll say this: for $297 you get all of my indicators. There are literally hundreds of hours of recordings. In the brand new members area you'll find hundreds of handouts. Now, let me say this: if you're a brand new trader, you may think, oh, this is going to be overwhelming. No, because I put you on the right track when I initially train you in which setups to focus on. You only need one or two setups to make a lot of money in this business, and I should say potentially make a lot of money. Now, I also have a bonus where, and this is nearly the end, where you can also attend 8 of my coaching sessions. That is, I run a live trading room but also run a coaching room, and so you can attend my coaching sessions. I run 2 sessions a week, 6 p.m. to 8 p.m. Eastern Standard Time, and I include 1 month there. In fact, the price has now gone up to $197 a month for that, but you're not signing up for that, by the way. I'm giving you a month free, and if you wish to continue, as many of you will when you see how I train you, you've just got to drop me an email and say, hey, can I continue, and I'll send you the information. But you're not signing up. So $297. If you're interested in what I show you, you can go to the link below. Let's now get into this. Very important, traders, is stop looking for reasons why the setups or trades won't work out. Okay, unfortunately we live in this society today where we're skeptical about everything. I want you to consider the logic, so I'm going to explain the logic that I use. It's very, very important. The only reason these setups will not work for you, either you're in a market where it's just too fast, and you can't get your entries or exits, you can't get into the trade, or you're trading a flat market, a very range bound market. But I've got and I'll show you a little technique today which will keep you out of that. So the secret is to really stay out of the chop and trade a time frame that suits you. Now, today's session I'm going to be showing you how I trade the New York afternoon, trading the 4-tick Renko on the Russell. Now, once again, you can trade any market you like. I really like the Russell in the afternoon, the New York afternoon, and because that's early morning my time, the sun's rising down under, and so that I really like that market. I love the currency futures contracts as well, but they're fairly slow in the afternoon session. Now, this is I'm really dead set serious when we look at this. How are you going to achieve an income of $1,000 a day, $5,000 a week? I believe in what I call POQ, the power of quitting. Unfortunately, so many traders give themselves unrealistic expectations on how much they can target. I'm going to show you how potentially you can easily achieve that 200 a day, and I'm going to give you a ton of examples in a moment, not where trades I've fired off, but you'll see how I've made it so easy to identify these trades. Now if you want to be super conservative, you just trade 10 contracts, and I'll show you in a moment the secret to achieving this. Secret number one is, if you're a new trader, trade with the trend. Now you're going to see me take a reversal and a reversal confirmation in a moment, but you'll see just before us and just after there are a ton of with trend trades as well. For brand new traders, I recommend you only trade in the direction of a higher time frame. So this is why my methodologies work so well. You're looking for a retracement on a lower time frame and taking a trade back in the direction of a higher time frame, but then we'll get reversals where the market then turns. Okay, and that is where then you'll see me take, I call them T3s or divergence. A T3 is a reversion to the mean, by the way, but then you'll see me take divergence trades, etc. But initially you trade with the trend. Now you'll also notice that I'm on Renko charts. You can trade any type of chart you wish. However, tick charts and Renko are my preference. So what are we looking for in a market? I consider myself really a scalper. I like to get in, get out, get paid. And so I need a market that gives me volatility, it gives me waves, and it trends well. Well, virtually every futures market, unless you say trading a seasonal market, will give you that at certain times of a day. Now of course we can trade now the futures markets 23 hours a day. If you trade Forex, 24 hours a day, 5 days a week. So there's just a ton of opportunities now. So say for an example, if you're in the US where the majority of my members are, I've got over, what is it now, 5,000 or 6,000 members now, and they can get home from work at say 5-6 p.m. at night and then start trading, because the market opens, it closes for 1 hour at 4 p.m. Central Standard Time and reopens at 5 p.m. Now the trades we're going to be looking at today, so I'm going to play back the recording, but I'm also going to explain the methodology and why they work so well here. So you'll see me take these two trades here. Now this is what we call an overlay chart. For a new trader, at the time when I was trading, I had no intention of actually showing this to brand new traders, but an overlay chart, once you understand what it is, very simple concept. See that white and black line, and then you can see this line just here, and down here you can see, what else we got? See that red line just there? They're indicators on a higher time frame. So I've overlaid some indicators. So what I can be doing is actually trade off this one chart, knowing what's happening on my anchor chart 1, trading in the direction of the higher time frame. Now this is one of the key reasons why my setups kick butt. If you go back and look at a ton of my videos, day after day I'm coming out in front. The reason is I'm trading in the direction of a higher time frame. Now this is also a fatal mistake that so many traders make. They're trading undercapitalized. Now fortunately you can start off with a prop firm today. So for effectively for between $50,000 and $150,000, you can basically, can I say, lease or buy the rights to trade a $50,000 account. Now certainly there's an evaluation process to go through, but there are a ton of options for you. But let's just say if you want to, and you're generally doing an 80-20 split up to a 90-10 split, but let's just say you want to keep it all yourself, and this is another way of approaching the market. So there's now with you've got it with oil, the NQ, the Russell, the Dow, the ES. You've got what we call micro contracts, which are 10% of the value. Now if you start off here with $400, now Your broker will tell you can start trading micros with $50 to $100. Yes, that is true. However, we are all about money management, and this is where so many traders will switch off. They don't want to hear the truth. They can't handle it. That is, we never ever risk any more than 2% of our account. And what's a realistic, and by the way, what is that? That's $8 on that, or $80 on a big contract. But here's what it means to you, and this is the Excel spreadsheet and the instructional video you can download. If you've got a $400 account, you go for $20 a day. Within 12 weeks, traders, you've got $4,600 in your account on the basis of just $20 a day. And that's on the basis, if you haven't seen one of my videos before, where you only start trading an additional contract every time you earn $400. So it's very conservative. You're using the market's money. Now in 12 weeks time, we can now roll over and start trading the big contract. We could trade the NQ, the YM, the RTY. Of course you can trade a range of other markets, but here I've just focused in on the Russell. And with a $4,000 account going for $200 a day, potentially in 12 weeks you've got your $10,000 a week income, and your capital is $46,000. That is the reality of this business. Now I'm about to show you on the charts how to do this. Now you only require, if you're a scalper, 4 to 6 steps, and you'll see what I mean by that in a moment, or 3 8-step trades a day for $200 plus a day. Now I like to get in, get out, get paid. I'm in my 60s. I don't want to keep trading all day. Ideally under hour, I want to have it wrapped up. Now say if you want to trade a little longer, you're a young gun, or perhaps you don't have the retirement fund yet and you want to build that up, you can do this in 8 weeks by going for $300 a day. Okay, so trading during the New York hours. This is the true potential, and this is where so many traders, they're just greedy. Sorry about that. That's turning off the air conditioning then if you heard that beep. But here, if you start with the micro Russell, once again you can do the ES, you can do a range of markets here. 400 minimum, because we never risk any more than 2% per trade. You see, greed is what kills traders. You'll hear me say regularly in training, get rich slowly, and I'm talking about in under a year. This is the true potential. It's not the setups, it's a challenge, by the way. Okay, I don't know if you can see the little arrows. They're telling you basically you're in on the next candle if you're following those, or if you follow the gold following, is of course it's a little more than that. Okay, we want to be following the gold. See that gold line, and you'll see that on the chart in a moment. So there's a little more to that, but this is the true potential. Now if you go from the simulator to the big contract, you've done that in 24 weeks. But let's just say here on the micro, I should say, I think I might have said the simulator, but say if you allow 6 weeks on the simulator, look where you are potentially in 30 weeks, and you can do this after hours. This is the true potential. But unfortunately, so many traders, once again, they just want to cut corners. They don't want to do it correctly. So let's go to the charts. Now as we go to the charts, what you're going to see here, traders, is I don't have the pivots on, and I want to show you afterwards the effect of how or what you can see when you put the pivots. Now your prior days open, high, low and close, your major EMAs, intraday swing highs and lows, and current high and low. We have indicators that'll plot all of these now. Okay, and virtually every trading platform has them, or you can Google it and get them for free. And so you can, all of these points, for professional traders such as me, we sell and buy into these. And you've got other traders, they become, let me put it another way, they become a self-fulfilling prophecy, as you're about to see. So let me first of all, let me just minimize this. Let's go and play the recording to begin with. And so there's no voiceover on this. I'll just talk here and give you a rundown and just explain what I'm doing. Now just there, I've put an order in the market to go short, because what I've got there is, it's a setup called a T3. It's called a reversion to the mean. they do really well. They're generally a good 80% winner, and you don't have to have divergence, and they're very much based upon a pattern, as all of my trades are pattern based. Okay, so what I'm looking for is patterns that we see every day. Now just here, the market is about to break out of this range to the long side, and I'm about to lift my target up. I didn't get filled there. Now I've got a technique that will tell me where exactly to put my order in the market in advance, so we know exactly where to have that order placed. So as we're rising here, once again I'll show you the pivots. We'll go back to the screenshot shortly where the pivots are, and you'll get to see those. So as we're rallying up here, I'm lifting my entry, excuse me, I'm now filled, and that's a very mechanical entry. There's a reason for entering right there. Okay, so I'm short 10. Now this is in the afternoon. This is at 2:46 Central Standard Time. You've got plenty of volume, very little slippage, and generally that cyan line is the 89 EMA, and so there's a very good reason why I target that. It's based upon a rule I have, very high probability. What have I just can't remember what we had here. Okay, this is a T3 on both the entry and the anchor chart 1. T3 is this reversion to the mean I mentioned. When you have it on an entry chart and a higher time frame, it becomes what I call a loaded trade. Now note that white and black dashed line. I'm not sure if you can see my mouse on here. See how it's now black? That's what that is telling me. On the higher time frame, that has well and truly rolled over as well. So what we've got there is a real bias to the short side. So what I'm looking for at this stage is not a long trade, but I'm looking for short trade. So obviously I'm still in this trade right here, and I might just move this along. Oh no, it's only got 3 minutes to go before we finish. So I still haven't been filled, as you can see there, so I'm still in the trade. Okay, we're bouncing just here, and for members watching, as you're probably aware, this is where we usually get a T10 setup. A T10 trade is a confirmation of a reversal, and you can get T10 set up on the entry chart or your anchor chart, and they're fantastic trades, especially after divergence or after something like this, after a T3. And this is where quite often you'll see I'll add to my position. Now you can only add, or I recommend, now just there, see where I put that order? Once again, that's based upon a very specific rule. What I'm looking for, I need to see some confirmation. So I'm just waiting. So what I was about to say, because I only risk 1%, so that means I can add to a position. But if you're, say, trading a normal account with a 2% risk, I highly recommend you do not add to your position unless you're well and truly already in the money. Okay, so money management is very important. It's critical. Unfortunately, so many traders don't treat it like a business because they want to get rich quick, and they wonder why they keep blowing their accounts. Now just start to move this along a wee bit here. So now we can see here we've been filled. Now let me just pause this for a moment. So we were filled on, let me just pull that back. Okay, so we're about to get filled. So we're now filled on the second contract. Once again, all based upon a pattern. And we're coming down. You can see there my 2 orders here. And you're about to see that I get filled, and it really started moving. By the way, at 2:50 at 3 p.m. Central Standard Time, you generally find the market can go really crazy, really move very quickly. So I don't usually trade after 3 p.m. Central Standard Time because it can get whippy, it can get very fast. You know, once again, horses for courses. Now with this just here, Yeah, so as you can see, that was very fast there. And for members watching this, it's a T10 on the anchor chart one. So I mentioned traders the reversal confirmation. I call them T10s. And once you learn, it's just a pattern. Okay, and you can see I'm in and out very quickly. Now let's just go to the chart itself. Okay, so this is on the same day. So what are we looking for here? So this is the beforehand, before I started to trade. See the arrows just there? So they're my turning point indicator. Now you can see there's one there, there's one there, there's one there. Well, which one do you trade? The one in the direction of the trend. Okay, so we want to be trading, and remember, follow the gold. So see my gold EMA there? I want to be scalping in the direction of the trend. Now just to give you an idea, I call these steps. Now on a 4-tick Renko, each one of these steps is worth $10. I need, or I want 20 of those a day, and that's net after any losses and after commissions. That's $200 a day per contract. Traders, if you're risking 2%, that's a 5% return per day. Now how do I do that? 3 8-step trades a day and you're there. That's all you need. Now as I mentioned, follow the gold. Now just see your turning point and your arrows. Now you're not going to be into the next candle. Okay, so you're in on the next one, you're in on the next one, you're in on the next one, and following the gold. So you don't want to be trading divergence initially. Okay, in fact you may choose never to trade divergence. Now down here we're on the way down. That's what I was going to say too about the pivots. Here I've got the pivots on there. Now see this black line down here? This is an EMA on a higher time frame. We bounce off this EMA, and it's just something I discovered, and I've never seen it written about or ever spoken about. It's incredible how we bounce off it. Okay, so we keep coming down, we're coming down. By the way, we call that a 3B. So see the arrows, all of those are in the downtrend. Now what about this one? I call it a 3B. Now a 3B is, once again, I'm off major EMAs in a downtrend once again. So now we're changing market direction. Now this is where, what about entering the trade right here? Do we enter here? Well, if you want to be really strict with your trading, see that white line just there? That's keeping you out. By the way, that would have kept you out of that trade initially. Okay, but as we go up, okay, now just here, let me just go to the anchor chart, because yep, there we go. So what I'm looking at here, with the overlay chart, I like to look at also the anchor chart. That's what these indicators are telling me what's happening over here. Now I want to drill into your mind, follow the gold. Do you have a trending gold EMA here? No means no trade. Okay, now this can be very tough at times. Okay, I want to trade. Well, we have a trend? Do you have, I call it a fanning of the EMAs? Absolutely not. Now if you were keen, you just had a T10. This is a pattern just there, and for members you can see your T10. So we've got a pattern here. However, for me, it's not a trade for me. Look how flat our major EMAs are. Okay, now we're rallying up. Now this is where you first saw me put a potential order in. Okay, and then finally I entered up here, but what you couldn't see on that video was this. I was also bouncing off the pivots. That becomes a loaded trade. So of course pivots are based upon yesterday's high, low and close, and so you can see here that they plot automatically in advance. They're a leading indicator, if not what I call a predictor predictive indicator. Now on the way down, we now get in a T10. Okay, so I've got a T10 on the anchor chart, and down we go. Now these say T10s, T3s, what the hell? They're just the code for a setup. Okay, they're all a pattern, and as humans we're very good at picking patterns. Look at the 34 EMA. Okay, that's follow the gold. Okay, now yes, there's more to that. There's things I'm looking for, the turning point indicator, and by the way, I've only got it coded with the auditory for NT8, but once you understand how it sets up, you can set it up on virtually any indicator, on any trading platform. But see the white paint bar? I've got that for just about every platform. It turns almost the same time. I call that my super scalper. In fact, this is a bit of an overkill because I got the turning point and the super scalper on there. Now we're heading down just below the 200 there, and now I've got nice little double bottom there. It's virtually what we call a bet the farm. So traders, the secret truly is, do I have a trend? Now look at the time here. So we rolled over, you had a slightly, here is just a black and white entry, that was at 211 in, and you can see here within basically 20 minutes you could wrap your whole trading up for the day. You've romped your 20 to 30 steps in. That's 20 to $200 to $300. Now up here I then had that here, and we're about to hit then the time I prefer to really set this out. So we come down, we now roll up. Now what about, by the way, this one just here? We may have even taken that if we looked at the, and actually before I say that, let's look at the anchor chart. Probably not, and the reason being I'm right at a major EMA. Traders, be extra cautious when you're selling or buying at flat EMAs. Such a simple rule, but it'll just keep you on the right side of the market. Now, and last little tip before we finish up here, traders, we're pulling back. You can see we bounce right here on the major EMA, and we call this a 3B. Okay, they just do really well, 3Bs. All right, now we're right at that 3 p.m. and you can see there we get a real a very fast move in the market. Traders, this is not rocket science. It truly isn't. It's just about learning and trading the patterns. The most important thing really is, do I have a bounce off a trending EMA? And as you saw me put up here before, where is it, just there, you only need between 3 and 4 trades a day, high probability. That's all you need in this business. Now yes, you can go for the runners. Okay, you can go for the larger trades. However, I always think back to the movie Moneyball. What was that, 2001 or whenever it was, or 2011, with Brad Pitt in it. And as they say in the movie on baseball, no need to go for the home runs, just get on base. Getting on base to me means just scalp in and out, leave something on the table for someone else. Get in, get out, get in, get out, just like how a sparrow feeds. That also means it's lower risk as well, because you've got a much smaller stop loss, you're in and out, and it's very easy to learn how to identify a trending market. Now as you develop your skill set, as I mentioned, you may choose to trade with divergence, but initially you trade in the direction of the gold. Traders, hope to see you as a member. Otherwise I'll see you on the next video. Thanks traders.